Your business is doing real revenue. $1 million a year, or sometimes several $1 million a year. And from the outside, it looks like you've made it. From the inside, though, you're trying to figure out whether you can make payroll this month. And you're bottling this all up because who can you tell? A quick story. I know a contractor I'll call Gavin. He is 15 years in the business and has a team of 12. There is strong demand and the clients refer more business to him. But just last month, he confessed to me that he's raking up debt to buy the parts for a job, even though the deposits for that job had already cleared his account. How does that happen? And that is the question this video is really about. I'm going to walk you through 3 reasons your business can have good revenue and still leave you broke. And by the end, you'll know which of these is happening in your business and how to start working on them in the right order. So the first problem that can be causing you to be broke despite success is that you don't have a financial operating system. Now, you might be thinking, I have QuickBooks or Lexpert Office. I have a bookkeeper. I'm not flying blind here. And you would be right. Gavin, our friend here, has all of that too. His bookkeeper reconciles weekly, his accountant files VAT and corporate tax, and he has a cash flow spreadsheet that he checks most days. He is not an unsophisticated guy. But the issue is, none of these financial infrastructure is designed to tell him what his cash is supposed to do. Standard small business accounting is built around 3 jobs: recording transactions accurately so the books reconcile, producing P&Ls and balance sheets for tax filing, and calculating what you owe the tax office at the end of the quarter. That's it. It does these 3 things well, and it was never built to do anything else. What it doesn't do, which no standard accounting setup actually does, is to tell you whether the $40,000 that is sitting in your account today is yours or is earmarked for the VAT bill in 6 weeks, or supposed to pay for the parts on the next job, or already promised to payroll. These reports are retrospective. They tell you what happened. They don't pre-allocate cash to its future purposes because that is not what they're for. So when Gavin has to decide what to pay this week, he's back to the instruments that's most legible to him, the bank balance or his cash flow spreadsheet. And neither of those things contain the information the decision actually requires. And here's the check-to-check loop that runs as a result. Money arrives in his bank account. It could be a deposit that is cleared or an invoice that is paid. And the bank account looks healthy. Gavin then looks at this and say, okay, I have money to pay rent, payroll, suppliers. But then suddenly, a tax bill that is bigger than expected appears. Gavin pays what is the most urgent, logically. And then the bank balance starts shrinking and Gavin's heart also starts to tighten a little bit more each day. The pressure has returned and he buries himself in more work. He chases down receivables, make collection calls. Sometimes he tries to stall a supplier, or in worst case scenario, he reaches for his credit card. He once told me, tens of thousands flow through my hands every day, and yet there are days I'm not even sure we can buy toilet paper. Every end of month is a scramble. And remember when I told you that Gavin couldn't buy the parts despite the deposits? Here's what actually happened. The deposits hit the account. The balance went up. And then another bill was more urgent for that day, so the deposit actually was used to pay that. By the time these parts needed to be ordered, the money was gone, and Gavin had to take on debt to buy them. Many folks at this point will be quick to jump out to say, this Gavin is so dishonest, this is super bad business practice, and well, it is not great practice, but it isn't dishonesty that is at play here. This is what happens essentially when the bank account is your main instrument doing the job, because the rest of the financial system is essentially built to answer tax office's questions, not yours. So the bank balance tells you how much cash exists. It doesn't tell you what the cash is supposed to do. The fix here is to add a structural layer on top of the accounting that you already have. One that decides what the cash is for before you get a chance to spend it. A writer that I really enjoy, Mike Mikulovich, he wrote a book called Profit First, and he describes one way of doing this, which I think could be a good standard for most small businesses. You set up a series of different bank accounts, each for a specific purpose. And then you also set up allocation rules, which is percentage based on your revenue. And whenever money comes into your income account, it gets distributed to the other accounts based on this percentage rule that you have set up at the beginning. If you're at the smaller end of small business, you can basically implement this entire system as is from the book. But if you're bigger, so with a CFO or with working capital lines or obligations that spans quarters, this tactic gets a little bit clunky, but in general, the principle holds. Cash needs pre-allocation. The allocation rule needs to be pre-decided. But cash structure is only the first layer, because even with the cash properly allocated, the prices Gavin is charging were built on numbers that don't reflect the truth. And that is the second problem. The second problem is you don't have a clear picture of what your work actually costs. If I ask you, which of your last 5 jobs was the most profitable, not which one paid the most, but which one, after everything you actually spent on it, left you with the most? Could you answer? If you can tell this to me within 30 seconds, congratulations, you probably can stop watching now. But most business owners can't. And if you run a service business, you think you have the data. You have timesheets, you have job records, you have invoices, and that is all great. The problem isn't that this data doesn't exist. The problem is the accuracy of this data and whether it does reflect the true cost of the business. Let me show you what I mean. Back to Gavin. A client calls him about a job. Gavin quotes 2 hours. He starts on the job, he runs into a complication, and then he spends another hour trying to figure out how to handle this. The job ends up taking 3 hours. When he writes the invoice, he charges only for 2. Because he thinks, if I were more experienced, I would have known how to handle the complications straight away, so it's not fair for me to charge the client for my learning curve, right? What Gavin has just done is that he has subsidized that client by an hour. And he didn't do it out of dishonesty. He did it out of guilt. In fact, he was being terribly nice about it. And things do get worse from there. The next client calls with a similar job, referred to him by the last client. And Gavin remembers the last one was a 2-hour job because that's what he charged. He quotes 2 hours. This job, however, instead of taking 2 hours, it took 3.5, even worse than the last job. So he writes off another 1.5 hours for the same reasoning. By the time he has done 10 of these jobs, Gavin has accrued so many hours of write-off, essentially subsidizing all his clients. But that is not the worst part. The worst part about this is that the quote that he has been giving out has been calibrated against years of essentially untrue costs. And every new client that comes on board gets priced based on what he chose to charge for past work and not on what the work actually cost him to deliver. Here's where it gets bigger. Once the business has a team, Gavin doesn't just quote his own jobs anymore, because most of the quoting is for work that his crew will do. His prices that work based on what he assumed the past work's cost, which was the budget he set, which was already wrong, is then now carried forward to his team on scale. So his guys would go out, do the work, and run into the same kind of overruns. Instead of having these hours properly costed, it basically just gets folded into the invoice and absorbed by the company. And there's another way that is pretty common that this unaccounted cost of work manifests, and that is through unpaid overtime. So every end of the quarter, Gavin's team rakes up quite a bit of overtime. It could be administrative tasks that have end-of-month deadlines, or it could also be the rush to make some cash by the end of the month. Gavin doesn't pay too much attention to this because most of the staff are salaried, so the labor cost on the business is fixed. He doesn't pay overtime pay. But the work that gets done in those extra hours is real work. It's how essentially a lot of these projects get delivered on time. And because nobody counts the overtime, every project looks like it was delivered within budget, which means that the next quote gets built on the same assumption. And this model only works as long as the staff keeps absorbing hours that nobody is paying them for. The moment someone leaves or wants a pay rise or is simply fed up or burn out, your business economics goes out of the window. And this is not a talent problem. You cannot just keep telling your people to work harder. It is a measurement problem. The numbers in Gavin's books say that the model works, but the reality that his people are living will tell you another story. The gap between the two is exactly where the business is bleeding. And the third problem that is causing your business to keep you poor is that the business model itself doesn't work. This is probably the most devastating to hear, but it's surprising how many businesses can go on for a really long time with business models that don't actually work. So once Gavin stops editing his hours, and once his team starts logging real time, once the quotes start reflecting what the jobs actually cost, he discovers something that is even worse. The model doesn't add up. The prices his clients are willing to pay are below the real cost of delivering the work. And it's not because it's underpricing relative to his competition, but because the cost of delivery, if he's really honest about it, is higher than the rate that the local market is accepting for his trade. So let me give you a concrete example using fictitious numbers. So let's say Gavin's crew bills $110 per hour for field work, and the field guys are paid $30 an hour. On paper, this looks like a healthy $80 margin. But once you add the hours that aren't on the timesheet, because the real day for this field guy is closer to 9.5 hours and not 8, and you also have the unbilled drive time between sites, the warranty callback, the proposal hours, the office manager's salary, the estimator's salary, the trucks, the insurance, the rent yard, blah, blah, blah. So all of these costs are added to that. The real cost per billable field hour is actually closer to $100. The margin is not $80, it's $10. And that is before Gavin even pays himself. If he raises his rates to $150 to fix this, Gavin estimates or fears that half of his clients would leave. Not because he's doing a bad job, but the value perception and the differentiation his business provides in relation to other contractors might not be so apparent to his customers. So if he can only charge $110, and this $110 barely covers all the cost and doesn't leave room for him to have a livable salary, then he's got a problem, right? So this is not just a pricing problem. This is a business model problem that is fundamental, and to fix that you have to actually examine your business model and rework that. Maybe for Gavin's case, he might have to stop doing all the small residential jobs that have terrible margins and focus on commercial ones. Maybe he repositions on a specialty where the rate is higher. Or maybe he needs to restructure the team, drastically bring the cost down, reduce overhead with fewer people, higher utilization, etc., etc. These would require some bigger changes to the company. While for some business owners, fixing the cash system and fixing the measurement is already very helpful, most of the time they aren't enough on their own. These fixes make the problem visible. They don't actually fix the problem by itself. If you're watching this video and you feel like I've basically described the situation and you want to know what to do about this, here's how I would recommend thinking about the situation. You need to do two things in parallel, and then based on that outcome, do the third thing. The first track of the two parallel tracks is to build a financial operating system. So I propose this because A, cash is what keeps a business alive, and managing cash without an operating system takes up a lot of mental bandwidth. So we want to get that out of the way as quickly as we can to free up your brain from the stress and hustle. And B, in 2026, setting up different bank accounts is actually pretty fast. You can open additional business accounts online these days. The rest of the work is in deciding on the distribution percentages and briefing your accountant, but that really shouldn't take too long either. Even though setting up the financial OS alone won't fix your business, I think it's low effort, is fast, and high reward. So you should initiate this process and in parallel, kickstart track 2, which is audit what your work actually costs. The reason why this should happen in parallel with building the financial OS is because this could take some time, depending on your existing data and team size. If you are a service-based business and don't have the habit of tracking time accurately just yet, deciding how to do it and making sure that everyone in the team does it can be a project in itself. You need to do this consistently over at least a few weeks. sometimes even months, depending on your cycle, before you can draw conclusions. So start now. This is a high priority to do. So once track 2 has produced enough signal, you can then ask the bigger question. Is this a model that can reliably pay you and turn a profit? And sometimes the answer is yes. And the model works and the fixes are mainly tactical. So you want to adjust the price, fix the scope, and stop absorbing work, and calibrate the financial OS to real numbers. Finito. Sometimes the answer is no, and what you have to then change is bigger, right? So you might want to work on your positioning, the scope, the kind of clients you take, the way work gets delivered, reduce inefficiencies drastically, etc., etc. But either way, you can only see this once track 2 has been completed. You cannot make a strategic decision on data that you have not updated for years. Most people didn't start a business to slave away at one. You started it because you wanted the success and the reward that comes with it. And you have already done really the hardest part. You started a thing and you've kept it alive for this long. If you can see that something isn't working, you should be able to trust yourself to do something about it. The catch, however, is the gap between knowing and doing. The work itself isn't technically difficult, but what makes it hard is that it asks you to question assumptions and identities that you've built the business around for years. And that is the part that business operators stall on by themselves alone. And this is where I can help. I work with business owners as part coach, part consultant, essentially a sparring partner who won't coddle you and also do parts of the work for you. I guide you through the implementation of your financial OS. I work with you through the cost audit, how to implement that and roll out with your team. I sit with you through making the strategic call on whether the business model actually makes sense. My approach really is in building capacity both in you and in your team so that you have the systems and structures in place that free you from being enslaved by your business. If that is the conversation that would interest you, drop me a note. The link is in the description. I hope this video has been helpful so far. My name is Victoria Englert, and I help small business owners build systems and structures so that your work sparks joy again. If you want to go deeper on any of the topics mentioned, drop that in the comments. But otherwise, like and subscribe for more operational fun for small businesses. 頑張ってね! Ciao, ciao!